Uber, in my opinion, is the most undervalued company in the S&P 500 right now. Not only has it improved its fundamentals, but its stock price is down for the year. And where the S&P has jumped by 25%. In that same time, it has able to increase its revenue by over $5 billion while becoming profitable for the first year in its existence. So before I jump in and buy the company, I wanted to do this analysis and share this with you guys, and you guys can make your own decision if you want to buy it or not. If you stick around after the analysis, in my thesis I'll tell you why I'm so interested in buying this company and why it has been flat for the year. And as always, if you like this video, please like, follow, and subscribe. These are Uber's current metrics. For us to get a price target for 2030, we need to do some research and figure out what these metrics could be. Its revenue used to be $10.4 billion to today being almost $42 billion. That is over 4x returns. It's had an exponential growth in revenue. Now we need to figure out what could be its revenue for the future. When I was taking a look at some analysts, a lot of analysts aren't projecting all the way to 2030, but they are giving us a projection for the next 3 years. For example, stock analyzing tool says it can grow an average of 16% for the next 3 years until 2026. Although Yahoo Finance doesn't project that far into the future, it's saying it can have a 16% growth in 2025. And if you take a look at some of the other articles from Google, an above 15% growth for the foreseeable future. Only one article from NASDAQ says that it can grow about 16% every year until 2030. A lot of them only projecting all the way to 2028. In my opinion, as it gets closer to 2030, the amount of revenue growth will decelerate. I'll give it yearly growth of 15%, which means it'll have a compound growth of 101% over the next 5 years, which basically means it'll more than double its current revenue. Next, we're going to take a look at its number of outstanding shares. As you can see, this company has never ever done stock buybacks. It's always diluting the shareholder by printing more shares. Now, I will be honest, I don't think this is a big deal because its revenue 4x'd itself, an additional 400 million shares. To give you a perspective, it diluted your position by 19% while returning a 4x growth. That is a fantastic trade-off. You might feel differently, but I want you to take into account they won't have to print an additional 300 million new shares every year to keep this growth. This growth that they maintained with this dilution, it's permanent unless the industry itself gets disrupted. Now, all other dilutions that happen in the future will be to increase its revenue even more from what it is today. So because it has a history of diluting shareholders, I'm going to say it's going to dilute the shareholder by another 20% over the next 5 years. This might aggravate you a little bit, but remember, it's going to do this while trying to 2x the revenue from today's revenue of almost 42 billion. So it might have to print 20% more shares to give you another 40 billion in additional revenue over the next 5 years. Now, its current margin of profit is 10%, and it only recently started becoming profitable. The first time it actually became profitable was in September of 2023. Here's my opinion on this. This is a platform company, and unless that changes, it's going to have a high margin of profit. Think of any platform company. Their margin of profit's always above 20%. So I don't see this being any different. I think this will have a 20% margin of profit, especially if you look at the growth that it's having on its profit margin. 3% in September of 2023, then 5%, then it plateaued for a few quarters, and then it accelerated to 10% in its last quarter. So I'm giving it a 20% margin of profit. I really do believe this will go above 20%. I think it'll hit 30 or even 35. Just take a look at Facebook or any of the other companies that have a similar business model where they're the platform provider. So when we plug in the numbers, we get a estimated stock price of $195, which is a 3.2x return from its current price. Now, even if we were to go extremely bearish, let's say it doesn't do 102% growth, it gives us a 50% growth. Even then, this company is worth $146 5 years from now. Long story short, I'm gonna buy this company because the upside is massive and the downside is basically non-existent. But you probably have many questions. The first question being, why did it drop from 180 from its all-time high to almost $60 today? That's because of Waymo, Tesla, Robo-taxi event that happened. Both of these companies are going to try to go direct to consumers by having their own apps and convincing customers to sign up to their apps and services instead of going through Uber. This makes analysts believe that Uber will go bankrupt. So this fear is causing this stock to be sold at an extreme discount. Number one thing, Uber has 150 million users. For these companies to be successful, they're going to have to take majority of those users away from Uber and convince them to sign up for their app and service for them to be successful. Uber's just not going to sit back and let this happen. If this autonomous ride stuff becomes successful and consumers like that more than actual drivers, they're just going to go ahead and buy autonomous cars. You think that in the future we'll only have Waymo and Tesla? No, there's going to be so many other companies out there that'll be more than happy to sell their technology to Uber. They might be happy to put their cars on Uber's platform and have an additional source of revenue. Ford is also working on self-driving cars. GM is working on self-driving cars. And a lot of European companies like Mercedes, BMW, they're also working on self-driving cars. They'll be more than happy to have that additional stream of revenue by putting these cars on Uber's platform. So at the end, this is how I see this playing out. Everyone's going to use Uber's platform to generate an additional stream of revenue, and Uber will collect fees like it does now with the drivers. The only difference is going to be, instead of having millions and millions of drivers, it's going to work with handful of big auto companies, and they're going to have a higher margin of profit because they'll know that these companies won't really have an alternative to go to. Anyways guys, I hope you liked the video, enjoyed it. Please like and follow. If you want to support me more, you can always check out my Patreon. There I post all these videos 1 to 2 weeks in advance. And with that being said, I'll catch you guys in the next one. Peace.